Hi everyone. Before I start this video, make sure that you're a part of my Discord server by joining the link in the description box below. And in this video, we'll be going over A-Level Accounting 2024 May-June Paper 2-2 question number 2. This is paper 2, which consists of 4 questions. 2 of them will be of 30 marks and 2 of them will be of 15 marks. And the total time limit for this paper is 1 hour 45 minutes. Since question number 2 is of 15 marks, ideally you should be spending about 17.5 minutes in order to solve this question. And in this video as well, we'll be attempting to solve this question within 17.5 minutes. So without any further delay, let's get started. J Limited's financial year ended on 31st December 2023. At this date, the following balances remain in the books of account from which the statement of financial position is to be prepared. So we need to prepare the statement of financial position for this question. We have been given the list of information. The following errors have been discovered in the information shown. For the first one, inventory at 31st December 2023 had been undervalued by 3,600. It means that we need to increase the value of the closing inventory by 3,600. And in this case, we have the inventory right here. So we need to add 3,600 to this value. So the correct value for our inventory will now be 84,000 plus 3,600, which results in 87,600. And for the first part of the question, we need to calculate the corrected balance of retained earnings at 31st December 2023. Remember that retained earnings is just the accumulation of profit for the year for the previous years. And these errors will have an impact on the current year's profit for the year. Since we do not have the value for the profit for the year, whatever adjustments were to be made to the profit figure will have to be made to the retained earnings now. So let's start with the given balance of the retained earnings right here. That is 242,400. So this is our draft balance of the retained earnings. And we have already calculated the first error, that is the inventory, which was undervalued by 3,600. Now let us talk about the impact of this error on the profit for the year ended 31st December 2023. Always remember that whenever we calculate profit, we subtract the cost of sales, and within the cost of sales, we subtract the closing inventory. And two negatives will make up a positive, which means that in order to calculate the profit, we always add the closing inventory. And in this case, the value of that closing inventory had been undervalued, which means that we definitely now need to increase the inventory value by 3,600. So those are two positives, which will again result in a positive. Now, it means that in order to correct this error on our profit figure, or in this case, the retained earnings, we just need to add 3,600 to the draft value. So let us add 3,600 here. This is the correction for inventory undervalued. Now for the second one, furniture and equipment had been depreciated by 25% instead of 20% using the reducing balance method of depreciation. Okay, so our correct rate of depreciation should be 20%, but we implemented a rate of 25% instead. And we have been given the value for furniture and equipment, but this is at its carrying value, which is after we subtract the current year's depreciation charge. So the first thing we need to do is figure out the carrying value at the start of the year. Let's suppose the carrying value at the start of the year to be X. If we subtract the depreciation charge for this year, which was the incorrect depreciation that we implemented at the rate of 25%, then we get the carrying value at the closing date to be 180,000. So our incorrect depreciation would be the carrying value at the start of the year times 25%, and this should be equal to 180,000. Now we can take X common, that would be 1 minus 25%, and this will be equal to 180,000. So the value of furniture and equipment at the beginning of the year would be 180,000 divided by 1 minus 25%. This results in the value of 240,000. Now let us also calculate the incorrect depreciation value. So that would be 240,000 times 25%, which is 60,000. Now let's calculate the correct depreciation at the rate of 20%. So that will be the carrying value at the start of the year, which is 240,000, times 20%, which results in the value of 48,000. Let us first calculate the correct furniture and equipment at carrying value at the closing date. In this case, we previously subtracted the incorrect depreciation of 60,000, so now we need to add it back. And we will have to subtract the correct depreciation charge, which is 48,000. This results in the value of 192,000. Now we need to correct this error within our profit. And remember, depreciation is always subtracted when calculating the profit. So previously we subtracted the 60,000, which was incorrect. Now in order to rectify that error, we have to add it back. So we need to add the 60,000 but subtract the correct depreciation of 48,000. So the total correction value would be positive 12,000. So we need to add the 12,000 in order to get the correct profit, or in this case, the correct balance for our retained earnings. Let's add the depreciation. Now for the third one, sales returns of 1100 had been recorded in the books of prime entry as purchases returns. The error affected the general ledger and the personal accounts of credit customers and credit suppliers. Alright, so it should have been sales returns. So whenever there is sales returns, the total value of the sales will decrease, which also means that the total value of our trade receivables would decrease. So we need to subtract 1100 from the given trade receivables value. So minus 1100 here. This would result in the correct value for trade and other receivables to be 38,100. And another error was that it was now entered as purchases returns. So after entering it as purchases returns, this would decrease the trade and other payables, which was incorrect. So now we have to increase the trade and other payables by 1100. So we need to add the 1100 here, which will give the correct value for the trade and other payables to be 20,800. Now let us look at its effect within the profit. So sales returns will be subtracted when calculating the profit. So we need to subtract the correct amount of 1100, and purchase returns is recorded within the cost of sales, which is subtracted while calculating the profit. And within the cost of sales itself, we subtract the purchases returns, which means that purchases returns is usually added in order to get the profit value. But in this case, purchases returns was added incorrectly, which now means that we need to subtract it. So we again have to subtract the figure of 1100 to show that now the purchases returns have been cancelled. So the first one is to show the correct value of the sales returns, and the second one is to eliminate the incorrect value of the purchases returns. So the total correction value in this case would be negative 2200. It means that we need to subtract 2200 from the draft balance of our retained earnings in order to get the correct value. Let's write it down. So that is less our returns error with the value of 2200. Now we can get the corrected balance. That will be 242,400 plus 3,600 plus 12,000 minus 2,200, which results in 255,800. That is all for the first part. Let's move towards the second one. Now we need to prepare the statement of financial position at 31st December 2023. Alright, so we can start with our assets section. And for the assets, we can start with the non-current assets. So in this case, the non-current assets we have will be the furniture and equipment at the correct value of 192,000, and we have property at valuation of 1,060,000. Let's record these two. So we have furniture and equipment with the value 192,000, and we have property with the value of 1,060,000. Now we need to calculate the total of our non-current assets. That would be 192,000 plus 1,060,000, which gives the value of 1,252,000. Now we can move towards the current assets section. For the current assets, we have cash and cash equivalents. Since this has a debit balance, it represents a positive value. It will be recorded as part of our current assets with the value 28,900. We then have inventory with the correct value 87,600. Then we have our trade and other receivables with the correct value of 38,100. That should be all for our current assets. Let's write these three down. So for the first one, we have cash and cash equivalents with the value 28,900. Then we had inventory with the corrected value of 87,600. And we have trade and other receivables with the corrected value of 38,100. Now we can calculate the total for our current assets. That will be 28,900 plus 87,600 plus 38,100, which results in the value of 154,600. Then we calculate the total assets. That will be our total non-current asset plus total current assets. So 1,252,000 plus 154,600, which results in 1,406,600. Now we can move towards equity and liabilities section. For this one, we're going to start with equity. And in this case, for equity, we have the issued share capital of 750,000. We then have the retained earnings, and we need to include the corrected value of 255,800. Then we have the revaluation reserve of 70,000 and the share premium of 220,000. That should be all for the equity part. So we first have the issued share capital of 750,000. We then have our share premium, and share premium was of 220,000. We then had the revaluation reserve, which was of 70,000. And finally, we have our retained earnings. And retained earnings, we figured out the corrected balance of 255,800. Now we need to calculate the total equity value. That will be 750,000 plus 220,000 plus 70,000 plus 255,800, which results in 1,295,800. Now we can move towards the current liabilities section. Wait a minute, I think we had debenture as well. We had the debentures, but remember that it is to be repaid within 2024, which means that it is to be repaid within 1 year, because currently we are looking at the year ended 31st December 2023. So 2024 is just 1 year after, and this debenture is to be paid within 1 year, which makes it a part of our current liability, not the non-current liabilities. So in this case, we do not have any non-current liability. So as part of our current liabilities, we need to record 8% debenture with the value of 90,000, and we need to record the trade and other payables with the corrected value of 20,800. Let's write it down. So we have the current liabilities. We first have our 8% debenture with the value 90,000. And we have the trade and other payables with the value 20,800. Now we can calculate the total for our liabilities. That will be 90,000 plus 20,800, which results in 110,800. Then we need to calculate the total equity and liabilities. So that is just going to be the sum of total equity and total liabilities, which is 1,295,800 plus 110,800, which results in the value of 1,406,600. And we can see that our total equity and liabilities is equal to total assets, which means that our statement of financial position is correct. That is all for the second question. If you found this video useful, make sure that you like the video and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.